Look, obviously we're all enjoying, better times for the Chinese market, but it has, we have to note, been an incredibly narrow rally. It's really been 3 or 4 stocks, and I suppose the real question is, and it leads into your question, is when's that going to broaden out? And we can talk about that in a minute in more specifics if you like. But I think, what's happened recently obviously has been the DeepSeek, the recognition of AI, the recognition of innovation in China, at the same time when the attitude to the private sector, which is so important, and that's what really derated China in February 21, has come back. And so those two have obviously led to a decent rally. I think the MPC won't bring many surprises. I think, the government will probably go for the 5% target, more fiscal support, some looser monetary policy going forward, but I don't think there's going to be anything significantly unexpected. And I think, people appreciate that the recovery in the domestic economy takes time. The property data last month was still down, but slightly better, but it is improving. The consumer is still quite weak, but still spending. And so it's going to take time. What really needs to change is the employment and the wage growth outlook, which is still pretty weak in domestic China, particularly in the larger cities, particularly in the professional sector, and that needs that confidence going. Now, whether the meeting with the private sector and President Xi last week, is a sign that reinvestment in the private sector is going to start, then that would be significant there. So, we think at the moment we've probably got a bit of exhaustion in the top stocks in China, so we should see the laggards, as is sort of happening this morning, picking up. But whether it goes into the real economy, as into the sectors that drove the rally in September, October, brokers, property, consumer, particularly on the staples side, and then the insurance companies, I think is still going to be wait to see.
So, Sean, what do you think will be the catalyst then for seeing some rotation into the wider economy/markets, given that we do have a lot of views of this, concentration risk of China's equivalent of the Mag 7?
Yeah, I think, as I said, Sam, I think that's a danger, because there's an looking on the charts, there's an exhaustion level with that, and I think it will widen out. And actually, if you go back to the September-October rally, those larger stocks didn't perform well. They had performed well at the beginning of the year because they had better earnings outlook, and mainly by capital management, and they've been buying back shares and paying out dividends and not subsidising as much. And it was the real economy that really moved. So yeah, I would see that. I mean, I wouldn't be underweight these larger stocks, because I think they've got more to go. But in the short term, they'll probably take a pause, and we'll start to see a wider of the laggards picking up, and then people will wait to see the evidence from the MPC and going into the second half of the year of whether we actually see the real economy coming up. On the tariff side, I think people have been pleasantly surprised. It's only been 10%, and probably we have a window now until April or till August before we see any real change in that tariff. So I think the question is still, is this a temporary pause in tariffs, and Chinese tariffs the US will slowly put up tariffs over the next 6 months, or is this really, a new environment?